Ever look at a financial chart and think, man, this is like trying to read hieroglyphics?
Haha, I know the feeling.
Well, good news. This deep dive is all about cracking the code. We're diving into candlestick patterns.
16 of the most common ones, to be exact, to really up your trading game.
16! Sounds intense, but I'm ready. And we're getting this intel straight from the pros over at IG UK.
Yeah, they really break it down. And by the end of this, you'll be able to glance at a chart and instantly get a feel for the market sentiment.
Okay, I'm officially intrigued, but let's back up a sec. For anyone brand new to this, what even is a candlestick on a chart?
It's actually a really cool way to visualize a whole day's work of trading in one little symbol. Think of an actual candlestick.
Oh, get the visual.
The body, the tall part, shows you where the price opened and closed for that day.
So a long body means a big price swing during the day, right?
You got it. Now, those little wicks you see sticking out above and below the body, those are the shadows. They show the highest and lowest prices the asset hit throughout the day.
So even if the body's tiny, long shadows mean it was still a wild ride.
Exactly. And then, of course, you've got the color. Generally, green or white means the price closed higher than it opened bullish. And red or black, you guessed it, means it closed lower, bearish.
So much info packed into one little symbol. But I'm guessing one day's worth doesn't tell us much about where the price is headed in XT.
You're right, that's where the patterns come in. Over time, these individual candlesticks form clusters, sequences.
Yeah.
And that's when things get really interesting.
So it's not just about whether one day was up or down. It's the bigger story those daily moves tell.
Right. Exactly. These patterns can reveal things like support and resistance levels, those key price points where the market tends to reverse.
So it's like a battleground between buyers and sellers, and these patterns show us who's winning.
Exactly. They give us clues about whether the price is more likely to break through those levels or bounce back.
Okay, so these patterns can help us decode the battle lines between the buyers and sellers. But with 16 patterns, where do we even start?
Well, a good place to start is, understanding the three main categories. So you got your bullish patterns. Those suggest the price might be headed up.
Makes sense.
Then, of course, you have your bearish patterns, hinting at potential price drop.
Okay, so bullish, bearish. What's the third one?
Ah, right. The third category, those are continuation patterns. They're basically telling you the market's taken a bit of a breather before its next move.
Like a timeout before the next play. Gotcha.
Now tell me, are the names of these patterns as cool as they sound?
Oh, absolutely. The names are half the fun. Like take the hammer, for example. This one literally looks like a hammer on the chart.
No way. Really?
Yeah, you've got a short body at the top and then this long shadow sticking out below.
So the price dipped during the day, but then buyers swooped in and pushed it back up near the opening price.
Nailed it. That's exactly what it suggests. Even though there was a dip, buyers were strong enough to recover those losses, like a little signal that bears might be losing their grip. Okay, so hammer, potential bullish reversal. I can already see how these patterns make the charts way more interesting. What about on the bearish side? Any dramatic names over there?
Oh, for sure. How about the hanging man? Same shape as the hammer, but this time it appears after an uptrend, so it's kind of an ominous sign.
Ominous? How so?
Well, think about it. It's like the market is clinging to the edge of a cliff, right? Like maybe it's running out of steam.
Ooh, okay, I feel the drama. So one hanging man after a big rally. That's not a guaranteed sell signal, though, right?
You're right. Always keep in mind these are clues, not crystal balls. It's all about context. You got to consider other indicators too, and the overall market trend. Never make a move based on one pattern alone.
Right. Piecing together the puzzle, not just looking at one piece. Okay, those were single candlestick patterns. Are there any that use two candles?
Absolutely. One you'll definitely want to remember is the engulfing pattern. It's like, imagine two candles locked in a struggle.
A candlestick showdown. I'm listening.
So, in a bullish engulfing pattern, you have a small red candle, a down day, and then bam! The next day, a much larger green candle just swallows it up completely. Buyers flexing their muscles.
Okay, so the bigger that second candle, the stronger the signal, right? Like bulls are in charge. And I'm guessing bearish engulfing is the opposite.
Exactly. Large red candle engulfs a smaller green one. Yeah, bears are back in control. So we've talked bullish, bearish. But what about when the market just can't seem to make up its mind?
Oh, tell me about it. Happens all the time. What do those patterns tell us?
That's where continuation patterns come in, like hitting the pause button, a temporary stalemate between our buyers and sellers.
Okay, a timeout before the next play. Any continuation patterns with catchy names? I gotta know.
Well, there's the doji, for one. This one looks exactly like a plus sign on the chart.
Get out.
Yeah, it forms when the opening and closing prices are practically the same, so buyers and sellers are totally balanced.
A candlestick draw. That's pretty cool. Are all continuation patterns like that, or are there some more active
Well,
ones?
if you want a little more action, picture the spinning top. Small body, long shadows on both ends,
So what does that tell us?
like the market spinning its wheels. Not sure which way to go next.
Spinning top. I can practically hear the tires screeching.
So, not a strong buy or sell signal then. More like a buckle up, we're not sure where we're going yet kind of signal. Exactly. Continuation patterns often mean we're in a period of consolidation. The market needs to catch its breath before making its next move.
So these continuation patterns are like yellow lights at an intersection, like, all right, gotta be careful here, it could go in any direction.
I like that. Little caution sign, yeah.
Yeah,
Doesn't mean slam on the brakes, but definitely pay attention.
right, exactly. Okay, so we've covered single candlestick patterns, double, bullish, bearish, those timeout patterns. But in the article, there was something about 3 white soldiers and 3 black crows? Those sound kind of
They
intense.
really do. Sounds like we're about to get into a candlestick battle here, which, in a way, we are. It's a great example of how multiple candlesticks can paint a bigger picture of what's going on.
Okay, so it's not just about individual candlesticks, it's the story they tell together. What's the story with these armies then?
Well, the 3 white soldiers is a really strong bullish signal. You're looking for 3 green candles in a row, each one closing higher than the last. It's like the bulls are just marching forward.
3 in a row, yeah, that's definitely a statement. And 3 black crows would be, I'm guessing, the opposite.
Exactly. 3 red candles, each closing lower than the last. Not a good sign if you're hoping for a rally, that's for sure.
So we've got single, double, triple candlestick patterns now.
Mhm.
Are there even more candlesticks in these formations, making them even more complex?
Oh, absolutely. There are tons of patterns out there. It can get pretty complex. But just like learning anything new, you start with the basics and build from there. The more candles you add, the less often you're going to see those patterns. And the more you have to consider other factors.
Makes sense. Don't overcomplicate things when you're first starting out.
Exactly. Focus on these core patterns, master those, and you'll be well on your way to reading the charts like a pro.
This has been awesome. We've gone from hieroglyphics to actually understanding the language of the markets, all thanks to candlesticks.
It's amazing how much they can tell us, right? The sentiment, the battles between buyers and sellers, those moments when the market's just trying to figure out its next move.
So much good stuff for our listeners to start using. What's the next step? How do they go from learning this to actually using it in their trading?
Practice, practice, practice. Fire up those trading simulators. Test out what you've learned. See how these patterns play out in real time. And always, always remember context is everything. Candlestick patterns, they're just one tool in your toolbox, right?
Mm.
Keep an eye on those broader market trends, the economic news, and of course, always, always manage your risk.
Combining that candlestick knowledge with good risk management, always solid advice. Now, before we wrap up, one last food for thought question for our listeners. We've been talking daily charts this whole time, but could you apply these patterns to like minute charts, even second charts?
Ooh, now that's an interesting thought. Things would be moving fast, the decisions, the speed. But definitely something to think about as you continue to explore the markets. But the cool thing is the fundamentals of candlestick patterns, they stay the same. It's all about understanding the story those candles are telling.
And on that note, we'll let you get back to exploring the fascinating world of candlestick patterns. Keep learning, keep practicing, and most importantly, have fun out there.